Folks, I went nuclear today. Yes, I did. We're going to speak about the nuclear option I did utilize here today. I put about $50,000 into a stock. We're going to talk about why I went ahead and did that. I believe it's the biggest move I've made since Meta of 2022 when I put $77,000 in that stock within like a 24-hour span. So massive move. We're going to speak about that at the top of this video. Then we're going to get into Palantir stock. It hit $24 plus here today. We're going to talk about where this stock goes from here. Is this it? Do we have a long way to go? So we'll speak about that in regards to today's video. Third thing we're going to speak about is Fubo, which has been a subject of conversation the last couple of days here. And the last thing we're going to speak about is the bubble talk. I think every day I turn on CNBC right now, they're talking about bubble this, bubble that. Are we in a bubble? Is this 1999? These sorts of things. So we'll speak in depth about that in this video here today, folks. Okay. Appreciate you joining me. I hope you appreciate this video I'm putting out for you here today. It's a very in-depth one. So all I ask in return is that you smash that like button and make sure you're subscribed to the channel. And that's it. Smash a like, make sure you're subscribed, folks, okay? If you want to join my Patreon, that's pinned comment down there. You can support my content that way also. And I'm going to be making major moves in that portfolio in less than 24 hours from now. You get to see my buys and sells each week in that portfolio, exactly how I build a portfolio, plus get access to that Discord chat, okay? Alrighty, guys. So the nuclear option I did utilize here today. I did have to do it. And it is this. I went ahead today and I sold 3 baby positions in the public account. These were all very, small positions relative to the portfolio. And I went ahead and put that nearly $50,000 all into PayPal here today at $56.05. I acquired another 883 shares of PayPal here today. That puts me in the public account now at 3,105 shares in that particular portfolio. So it has become a very large position. And if this stock does go to where I think it's going over the next couple of years here, it's going to become a much larger position overall. This is now the 4th biggest position in the public account. If we look at my Mag 6, which my Mag 6 in the public portfolio is positions that I have over $100,000 in. If we look at that, it's now the 4th biggest position out of all those. It's now eclipsing ELF and eclipsing even Palantir now at this point in time, which shows the belief I have in regards to the stock, right? And it's also the only one of my Mag 6 that I'm down on, right? I mean, the other ones, Meta's 283% gain, Tesla's 588%, Amazon's 58%, PayPal's negative 10%, and then ELF's 2,200%, and Palantir is now 177%, right? So for me to put this into the same group as these stocks shows the belief I really have in this company, that I think it's going to be, one that shines through and it's going to get me unbelievable gains, and I take relatively low risk in this particular stock, okay? Now, also, in the Patreon portfolio, which I spoke about at the beginning of the video, right, where you get to see all the moves I make, this particular portfolio, it's the number 1 position I have in that particular portfolio, eclipsing every other stock out there, right? Which once again shows the belief I have that I would make this the largest position in the Patreon portfolio, and now the 4th biggest position in the public account. There's got to be something here, okay? That's all I'll say about that, right? Now, there was something very important that happened on the conference call that I haven't heard anybody else pick up on other than myself, okay? And that was toward the beginning of the conference call. Within the first 2 minutes of Alex Chris talking, he described the results they just posted as solid results, right? If I say solid, let's say you cook me dinner, okay? You come on over the house and you cook me dinner over there, and you say, how was the food, Jeremy? And I say, it was solid. What does that mean? It means it was okay. It's okay, right? If I say, oh my gosh, that was amazing. The dinner you cooked me, that was amazing. If you flip my flapjacks, right? Oh, that's a holy smokers, this ain't no jokers. That's a great dinner you cooked me. Oh, that was really good. That was excellent, right? Those mean something else. If I say it's solid, it was a solid dinner you cooked. That's nothing special, right? Now, what's fascinating about this is that's the way Alex Chris described this quarter, right? A quarter in which they had 15% total payment volume growth, and he described it that way 3 times, so it wasn't a mistake. This was pre-planned that he called it a solid quarter 3 times. 3 times within the first 2 minutes of him speaking. 15% total payment volume growth to over $400 billion in the quarter. 9% net revenue growth, 39% operating income growth, 52% net income growth, and 61% EPS growth. It was solid. maybe that tells you a little bit about where he sees the future of PayPal and then type of numbers he thinks the company can put up over the coming years. If that's just solid to him, right? Because that's like, wow. Now, there's a conspiracy theory going on in regards to PayPal stock. Okay, there's a big conspiracy theory that I got to tell you guys about. And it might hold some merit. So the conspiracy theory is management team comes out on the conference call. First off, they don't give a yearly guide as far as rev. They lowball guidance in general for any numbers they did put out there, right? So there's a conspiracy theory that the management team, Alex, Chris, and those folks, purposely didn't want to sound too excited because they didn't. They did the opposite of try to pump the stock. If anything, they try to not pump the stock, right? So they did not even one thing remotely try to be pumpy on the conference call, right, to get anybody excited. Also, lowball guidance and those sorts of things. So there's a conspiracy theory that they came out and did that because they're going to buy back a ridiculous amount of shares of stock this year, right? And, I mean, they talked about they want to buy at least $5 billion worth of stock. So you come out, you lowball your guidance, you don't even give certain other guidance numbers out there, right? Your stock goes down. Well, guess what? You can buy so many more of the shares out there, right? Here's the deal. PayPal's market cap's only like $60 billion right now. $60 billion, right? So basically, PayPal's going to be able to buy back roughly, I would say PayPal this year should be able to buy back, and it depends where the stock price goes throughout the year, but probably between 7% on the low side and maybe 11% of the entire company's stock they should be able to buy back over the next, let's call it 10 months or so, right? So we're talking about this is a substantial portion. This is one of the biggest buybacks I know of in terms of how many of these shares the company's actually going to be able to buy back this year, right? So if you did know that you're going to do a $5 billion plus buyback, why would you want the stock to go high in the short term? We know a share buyback is a CEO's best friend, right? Because you buy back all those shares and oh my gosh, it helps your EPS so much over the next many years, right? And puts you in a position of power as a CEO in a huge way, right? So I think that's pretty darn important, especially when you look at how much SBC PayPal's had over the last, we can call it, 5-10 years or whatever, right? They're going to be able to take off so many shares off the market. So it's a conspiracy theory that I think holds some weight, just to be honest with you guys. I really do, right? If you look at Apple, for instance, one of the most amazing things Apple's pulled off over the last 10 years specifically is their share buyback, right? They've spent over $600 billion in the past 10 years or so on share buybacks, right? And so it's fascinating because they talk right here about Apple stock has seen an annual gain of 26% on average. Meanwhile, their net income's only grown 9% on average, right? But if you're taking massive amounts of shares off the market all the time, as long as you're able to, grow your net income some, it's going to help your EPS, which is what analysts look at and investors look at, grow substantially. It's all about the EPS, right? When you're a profitable company. If we look at Apple, for instance, here's how big of a difference it is. This is Apple's latest income statement here, okay? And look at how big of a difference share buybacks make. It's substantial, and this matters significantly for PayPal. Look at this. Apple hardly even grew revenues. That's like nothing. They grew their revenue like $2 billion. For Apple, when you're doing $100 billion plus a quarter in your revenue, growing $2 billion is literally like you might as well have been flat when it comes to your revenue. That's nothing, okay? But look at the EPS growth. They went from $1.89, or we can say, well, let's look at a diluted basis, right? $1.88 to $2.18 of EPS. So that's a massive growth in terms of EPS when your revenue hardly did anything. That's the power of share buybacks. I can tell you, if Apple didn't spend $600 plus billion on share buybacks over this past 10 years, their EPS would be a fraction of what it is today. That is something to keep in mind here, right? Now, when it comes to Alex Chris, everybody's freaking out over the guidance. Everybody's freaking out. Oh my gosh, the guidance, right? Alex Chris specifically said, we're doing conservative guidance. Conservative guidance. And everybody's flipping out over the guidance when the man just told you we're doing conservative guidance. That needs to tell you as an investor when they're doing conservative guidance that, like, we're going to beat these numbers, dude. We're putting these out here so we can kind of lowball it and then come in and look like superheroes. That's what they're coming in to tell you. It doesn't mean that's the numbers that's all we're going to be able to do. When somebody says if he never said conservative guidance, then it's like, okay, maybe he's serious. Maybe this is all they're going to do this year. But if somebody comes in and says, we're being conservative here, right? Come on. If you were going to build a pool in your backyard and the pool company said, it's probably going to be at least, $75,000, but that's a conservative number there. That should mean something to you. Right? Now, here's the deal, right? Let's look at the old PayPal versus a new PayPal. So Alex Chriss now has been as CEO in 2 quarters so far. This was his second conference call. This was his second earnings report, right? Now, look at the new PayPal. 7-cent beat on EPS his very first quarter and a $35 million beat on revenue. Look at his second quarter with the company. Now a 12-cent beat, so a much bigger EPS beat, right? And a much bigger revenue beat. He just beat revenue by $154 million. Those are Alex Chris's first 2 quarters, right? Substantially beats in the right direction. Look at the old PayPal prior to Alex Chriss being the CEO, right? And look at how many times they either met numbers or missed numbers. Keep in mind, Wall Street looks at a meet as a miss, okay? If you come in and you meet EPS, they look at that as a miss. Just always remember that, okay? So, miss. Look at that. I count 6 misses in a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters. 6 misses in 9 quarters, that's inconsistent. That's going to make trust issues, right? And I know, once again, they met here. Once again, a meet is a miss in Wall Street's eyes, okay? That's 6 misses in 9 quarters. That's inconsistent. That's bad. That's old PayPal. New PayPal, Alex Chris's PayPal, is we're going to beat numbers. And when we say we're about to report earnings, people are going to start getting excited because they know we're going to come in and we're going to beat EPS and we're going to beat revenue. We're not just going to come in and meet. We're not going to come in and miss. We're going to come through with the numbers, right? If we look at Intuit, I was looking at some old Intuit numbers here, and look at this. This is fascinating. This goes all the way back to kind of like, 2019, 2020 type time frames for Intuit into 2021. And look at this company. Every flip and flapjack and quarter, beat on EPS. And some of these beats are epic, by the way. Why am I showing you Intuit, by the way? You might be wondering, well, Alex Chriss is from Intuit, right? So, this was a huge part of his numbers. Look at the beats. Beat, $25 million beat, $43 million, $29 million, $40 million, $15 million, $6 million, $243 million, and $107 million beat by Intuit, right? So, I think he learned a little something over there at Intuit, right? And, I was even looking at the latest quarterly numbers. I mean, my gosh, they beat by EPS by a mile. And they beat, by nearly $100 million when it comes to revenue. And how is Intuit stock done? Well, a 10-year of Intuit has gotten you a gain of 797%, dwarfing the QQQ, the NASDAQ, the S&P 500, the Dow 30, the Russell 2000. Nothing's even come remotely close to that sort of gain when it comes to any of the stock market indexes. None of them. You can look around the world. Nothing even remotely close to 10-year performance that Intuit's gotten you, right? If you're a great company and you put up numbers and people can be confident you're going to come through quarter after quarter after quarter, man, do things start to change. And look at the respect levels Intuit gets, right? Incredible respect. And this is despite they got a lot of competition. Intuit's got 1 million competitors, some free competitors. And so some people say, why should anybody even use Intuit products? I mean, heck, the government even has free tax-related products, right? There's a ton of different competitors for QuickBooks out there. And yet, look at the company. They command a 39 forward P on the stock, 34 times next year's numbers, a 29 PE on 2026 numbers, right? That's respect. Intuit has respect from Wall Street and respect from investors. That's a real company, okay? That's what he wants to grow PayPal into. PayPal's a company with no respect. PayPal's a company that trades at 12 times this year's expected numbers and 11 times the following year. When you're trading at those sorts of valuations, the market has no respect for you. Investors have no respect for you. They don't feel like they should have to pay a penny for you. They don't feel like they should have to pay up at all for you because you're just another nothing. And that's the way people view PayPal at the moment. And I think the man's off to a good start here, and I think he's going to change this massively over the next few years. We'll see. We'll see. My chips are on the table. I think I got a good hand here, but we'll see, okay? So that's that. Next up here, let's talk about Palantir stock, where Palantir stock's headed from here. And then we'll get into Fubo, and then we'll get into the bubble talk around this market, okay? So Palantir up massively again today, about 4%, which is a huge move. When you come off of a 30% move onto a 7% plus move, then you have nearly a 4% move. That's just ridiculous, okay? And I mean, the gains in the stock are starting to get fun because now we're up $87,000 on Palantir. And so we only put $49,000 into the stock. So things are getting really fun because now the gain on the stock is starting to get to a place where it's, close to double the original buy at this point in time, right? Which, to show you the power of when you start hitting the 200% and more mark, it starts to get powerful. Check out ELF, for instance, right? ELF, $7,200 I put into the stock, right? Cost basis. Look at today, for instance, on ELF. ELF was up only 4 percentage points. And I almost made my entire initial investment back today on a 4% move. On a 4% move, right? So this is where things start to get fun with stocks. Really fun with stocks, okay? Now, in regards to ELF, I actually reacted. Their CEO went on Kramer yesterday, and I reacted to that today on the Reaction channel. Jeremy Lefebvre Makes Money. So after this video is over, if you care at all about ELF stock, make sure you check out that particular video there, okay? Now, when it comes to Palantir, here's the deal, okay? These numbers might get thrown out. It looks like the stock's trading so rich. Oh my gosh, 73 times this year's expected number, 60 times the next year's rate. These numbers might get thrown out so far you couldn't even imagine it, okay? Here's the deal. They just reported 70% U.S. commercial growth, right? And we know the AI-related numbers are all going to start hitting for these companies in 2024. Snowflake told us that, right? And if you look at the way AWS has talked, like the real AI-related revenue is going to start to pour in for these companies like a Palantir and others in 2024. So we haven't even seen the best of this yet, right? 70% commercial growth. So, I mean, that business line is going to grow so substantially over this next 5-10 years. It's going to be ridiculous. The growth rates are going to be insane. And we don't even know if we've topped the growth rate. They could accelerate that more. Do keep that in mind. It's not a guarantee, but there's a decent probability they might actually top that, okay? Operating income for the company is starting to fly, which means these numbers might not even be remotely close to what they actually report with this company, right? I mean, check this out. They went from, if we look at the September 2022 quarter, which wasn't that long ago, they had a $62 million operating loss, and they just took it to nearly a $66 million operating income here in the latest quarter, right? That's just in a 5-quarter span. Imagine what they're going to do over the next 5 quarters, especially as growth reaccelerates for this company. Oh my gosh. And we have a CARP and management team now that really want to keep costs for the business down overall unless it really is like a necessary thing, right? And so 2024 and 2025 AIP numbers should start to hit big, right? All this AIP talk and all the AIP boot camps and everything they're doing there, that was all like get customers interested 2023. The monetization really starts to come in 2024 and 2025. And so this is a story here that's evolving pretty rapidly, and there's a reason the stock just keeps going up and up and up because a lot of people realize, oh my gosh, you got to get on this train now or you're going to miss the train, right? And so the FOMO cycle has really started now in Palantir, and this could keep up for a while. And keep in mind, in regards to the FOMO cycle, the bigger the Palantir revenue numbers start to accelerate as 2024 goes along, the more FOMO will start coming in the stock. Because if all of a sudden they take that overall revenue growth rate from 20% to 25% or 27%, 30%, you can see nothing yet in regards to that one, okay? So Palantir could keep rolling here for quite a bit. Let's just put it that way, right? It'll have short-term pullbacks here and there, but believe me, there's a lot of people dying to own this stock in the market that are like, how do I get in this one? It looks like it's actually one of the best possessions. When you're all of a sudden reporting 70% U.S. commercial growth, Wall Street starts to say, we're missing something here. We need to get on board, right? And that's what's starting to happen. Big money. I mean, you see the Cathie Wood buys recently? Holy smokes, man. That's no dang jokus, right? Alrighty. It covers Palantir. Now let's get into Fubo, and then we'll get into a little bit of the bubble talk around this market and kind of what everybody's talking about there, right? So Fubo. I'm sure you guys might have seen the statement the management team put out. They put out a statement around, they fought a lot of competition for a long time. The new service could be dead on arrival, and when I say dead on arrival, I mean it might never arrive in terms of new competitive sports streaming product. They could have a lot of trouble with the government even getting that passed. I think the government's going to start sniffing around a lot there in terms of that service to see what's actually going on there. I think it could get very legal, so that service might never hit even the market. If it does hit the market, they're going to have a whole problems of branding, and then how much marketing spend goes behind it. They're going to have so many problems, and then how the revenue breakdowns get. Guys, that sounds like a disaster, right? And so the market immediately heard this and just got scared and sold Fubo off massively. And I understand it's a scary thing, but you just got to understand, this is one of those things, it doesn't even look that realistic that it could even come to market. And if it does come to market, I have a lot of questions if it's ever going to be a success, right? And David Gandler, if you saw, the stuff he was tweeting last night, and I reacted to that on the reaction channel here today, he sounds pretty confident in regards to that whole situation, right? And my thing in regards to Fubo is, if this company were to die, right, it's their own fault. I would never blame it on somebody else. If they actually were to die, it's their own fault, because I look at the cash balance in this company. I look at they're bringing down their losses substantially. They've attracted a ridiculous amount of subscribers now. Their revenue's flying to the moon, and their service is so well positioned. Plus, it's an easy acquisition target for cheap money. There's no reason for a company like this to die. If Gandler really felt the company was ever in trouble and they couldn't raise money for whatever reason, I mean, he could easily sell to a bigger company, because there's a lot of bigger companies that are basically experiencing revenue declines that are in this related space and are looking for ways to grow, and just Fubo's right there, right? David Gandler, I don't think he wants to sell, and I wouldn't be surprised if he's been approached by several different potential buyers. I don't think he wants to sell. And the reason I don't think he wants to sell is because he realizes how big the opportunity is here, right? So let's say he sells at $4 a share, $5 a share. I think for him, he's looking at this and he's like, that's a joke price. We're going to be, what Dish Network was 15 years ago, we're going to be that for the next generation. So I don't think he has any interest in selling the company. And I wouldn't be surprised if he got approached. You may say, well, the company's losing money. Would somebody want to buy a money-losing company? 100%. All these other streaming companies and services and things like that are losing a fortune. They're losing a fortune. And so these companies have because their old school businesses are so profitable, they have no trouble starting a new service or acquiring a company that's a money loser. So that's no excuse. I think Gandler just doesn't want to sell because he sees a huge future for Fubo, right? So the moral of the Fubo story is, if that company ever dies, it's because it's their own fault. And so it's a high risk, high reward stock, and we'll see how it all plays out. Their earnings are coming up here in a few weeks, and I'm looking pretty forward to seeing the results they post up. I'm looking for them to continue to cut down costs, continue to add a lot more subscribers, and continue to have that revenue fly in regards to that, okay? So that's the Fubo situation. Lastly, let's talk about market bubble, right? I think every day I go on CNBC now, they're talking market bubble. Is it 1999? Market's gone up too much, too fast, all these sorts of things, right? And so what I want to illustrate here is, are we actually in a bubble, or is this just far-fetched bubble talk, right? So first off here, this shows you a lot of the biggest big dog companies, which these are companies that really drive the entire stock market in their growth rates, right? And so I saw this actually on an Instagram page. That was a nice illustration they put together here, right? Versus me, I'm always scribbling on my iPad. This is beautiful, right? Apple's obviously been super disappointing growth, only 2% in the latest quarter. Tesla's been very disappointing. We all know that, right? 3.5% growth. But then you have Netflix at 12.5% growth, Google at 13.5% growth, Amazon at nearly 14% revenue growth, Mr. Softy at over 17% revenue growth. We have Meta at nearly 25% revenue growth, and then obviously Nvidia's revenue growth is like 200% or something insane, right? And these are the stocks that matter the most to the stock market. These are the big dogs, right? So the first thing you got to factor in is there's a lot of growth going on with these companies, and keep in mind their bottom lines are growing much more rapidly than their top lines are. For instance, Meta grew top line, roughly 25%, but their bottom line was up like 203%, if I recall off the top of my head. So, and the market's driven off net incomes and EPSs, right? So that matters even more. So the moral of the story is these companies are all growing very nice, even in a tough consumer environment with inflation and everything that's been going on there, right? That's one factor. The next factor up here is, can we even say these companies are overvalued? Look at NVIDIA. NVIDIA is supposed to be the poster child of the bubble talk and the potential overvaluation, all these sorts of things, right? Look at NVIDIA. It's trading 33 times 2024 numbers, right? Well, their fiscal year ends January 2025, but this is really like 2024 numbers here, right? 33 times. Here's the deal. NVIDIA's crushing analyst estimates pretty much quarter in, quarter out now. So these numbers might be too low. And for a company that's expected to grow EPS 68% next year, trading at 33 times is way too low. If you've been in the stock market a long time, you know how to run valuations. You know if I tell you a company's growing their EPS 68% and they're trading at a 33 forward P, you're going to say extremely undervalued. Extremely undervalued. At a 33 P, you would expect that company to probably be doing anywhere from 7% to 15% EPS growth, commanding a 33 forward P, right? This is basically the market saying, like, we think, NVIDIA's just got a transitory bump in demand here and it's going to go right down. We'll see about that. If that's the situation, okay, I can understand. But outside of that scenario, the stock's actually very undervalued, and the stock actually deserves to be priced somewhere between $1,000 and $1,500 right now. That's one of the biggest market caps out there, right? Meta, one of the biggest market caps out there, expected to do 33% EPS growth in 2024, trading at 23 times. Doesn't take a rocket scientist to say that's not a bubble. That's undervalued. This is undervalued. You can't even put this into bubble territory. You put this into undervalued. It's a steal deal territory. Google McDougal expected to have 16% EPS growth, trading at 21 times this year's expected numbers. Bubble? No. Undervalued? Yeah. Another one of the biggest dogs out there, right? Microsoft, Mr. Softy. Bubble, 35 times forward P, and we can call it 19% EPS growth. Well, and we do know Mr. Softy seems like they beat numbers every single quarter. So once again, this number might be low. They might do $12 to $13 of EPS this year. So maybe it's trading really at like a 31 times this year's expected numbers. For one of the most consistent, well-run business models in the whole world, you're going to pay a 30, forward P on that stock. Bubble? Heck no. Not a bubble. If it was trading 60 times or 70 times or 80 times, okay, different. 30 times, 35 times for one of the most quality, arguably the most quality company in the world? No, it's not a bubble. Even you look at some of these other stocks that you would think would be bubbles in a bubbles market, and you look at some of their valuations, right? SoFi, if we look at next year's expected numbers, 17 analysts have numbers out there for next year, right? 254% EPS growth is expected for SoFi next year. Trade at 31 times? 254% EPS growth at 31 times, that's not a bubble. Like, if anything, that seems like out of whack. Like, what? That doesn't even make sense. It seems like super undervalued, right? A PayPal. If we were in a bubble market right now, a PayPal stock would be trading at a forward P of 40, 50, 60, like it was in 2021, right? The stock's trading at 12. How does that smell bubble there? It just, to be quite frank, it doesn't. So all this debate and talk around bubble, I'm noticing none of it's actually going into data other than stock price moves. Well, this stock's gone up so much since the fourth quarter of 2022, so therefore, bubble. It doesn't work that way. It doesn't work that way. It depends on what your revenue growth is, what your net income growth is, and where's your forward P at. It's all that matters. If you're up 2,000%, 1,000%, 500%, 100%, 1%, means nothing. What matters is the underlying numbers and where your valuation's at, given that market. And so when you look at it from that standpoint, it's very hard to argue that the market's in a bubble right now. Very difficult. Extremely difficult. If all the growth dies for all these companies, okay, then you can talk bubble. Then you can say, okay, valuations are too high, they need to come down. But for right now, you could make a very strong argument, I think, that stocks are undervalued right now. So that's just kind of my perspective in regards to this whole situation, okay? I hope you guys enjoyed today's video. I hope you appreciate it. I appreciate you joining me here today. Less than 24 hours from my big moves in the Patreon portfolio to see what the moves those are. Pin comment down there. You also get to support my content on here as well, plus get access to that Discord chat. Much love and have a great day.